The first directly observable figure in the market is the gross interest rate on loan operations. But, as we have said, these operations account for only a fraction of the time market. Despite appearances, if we add up all the loans in a society, they represent only a tiny fraction of the whole process in which present goods are advanced in exchange for future goods. I repeat, the process in which present goods are advanced in exchange for future goods. All this the loan contract encompasses, consists of society's entire structure of productive stages, including all the companies that operate in each, where company owners advance their workers' present goods in exchange for ownership of the final consumer good. The productive structure also includes cooperatives, Mondragon, etc., where workers decide to combine the role of worker with the role of capitalist, tighten their belts, wait a few months to be paid, and then acquire full ownership of the final product. What is directly observable in that entire time market, which comprises the productive structure and far exceeds the loan market? Accounting profits from production activity are directly observable. Each of those companies in each of those stages closes its balance sheet at the end of the year and obtains accounting profits. Well, from the standpoint of economic theory, those accounting profits companies obtain are composed of the gross market interest rate, which can be observed in this subset I have just described, along with its three components, plus or minus pure entrepreneurial profits or losses. If the world were in equilibrium, companies' accounting profits would coincide with the interest rate. Fortunately, the world is in a constant process of disequilibrium, which results from the innate creative capacity of human beings, who continually discover new ends, new means, and new profit opportunities that are latent and waiting for us to discover and seize them. This explains why the accounting profits of all companies contain a component for pure entrepreneurial profits or pure entrepreneurial losses. In each set of historical circumstances, and according to our interpretative judgment, we must be able to approximately quantify this amount. It is quite possible for a company to obtain accounting profits and yet incur entrepreneurial losses. In fact, this very frequently happens. I will give you a very simple example. Suppose that the owners of a company, any company, a small workshop, a taxi business, a photocopy business, or a larger company, etc. Suppose the owners of a company have provided as capitalists 1 million euros. They have sacrificed their immediate consumption and have supplied 1 million euros of present goods. And what do they do with the 1 million euros? What do entrepreneurs do? They hire workers. They hire Ismail, and they pay him his salary, because Ismail wants to be paid up front. He does not want to be a member of a cooperative. They buy a manufacturing plant, or they rent an apartment. They buy computers and software. And they recombine all these factors in a production process with a view to producing, designer skirts for the upcoming summer season. The production period passes, and when it matures, they sell the skirts at a market price. Let us imagine that when they sell the product, they do their accounting and they say, income, proceeds from the sale of the skirts, minus all expenses incurred, leaves us with an accounting profit of 70,000 euros. Should they be jumping for joy about this profit of 70,000 euros when they had saved and invested 1 million in capital in the company? If they invested 1 million, and at the end of the period, their company's accounting profits, the second block of figures directly observable in the market, are 70,000 euros, what interest rate have they earned on the money they advanced? 7%. But it turns out that the gross market interest rate in our example is 9%. So it is perfectly clear that though they have obtained accounting profits, they have incurred a pure entrepreneurial loss of 2%, 20,000 euros. Among other reasons, because if, instead of putting that 1 million euros into the company, they had lent it in the loan market, what would they have obtained at the end of 1 year? 9%. In other words, 90,000. So they have become entrepreneurs. They have launched a huge project. They have devoted hours of their time. They have hired workers. What a hassle, just to bring in 70,000 in the end. Dear students, they have incurred a pure entrepreneurial loss of 20,000 euros. Imagine that the owners of the company in our example, the company that produces skirts, close their balance sheet at the end of the year and do their accounting, income minus expenses, and they find they have obtained an accounting profit of 140,000 euros. Now, the question is, have they made an entrepreneurial profit or sustained an entrepreneurial loss, and of what amount? They have made a profit, and a profit of 50,000 euros. For if they had lent that 1 million they put into the business, they would have obtained 90,000, since the gross market interest rate is 9%. But because they devoted their savings to the company, they have brought in 140,000 instead of 90,000. And I am able, and you will be too in the future, when you establish your companies, to make a distinction, to say, well, of these profits, one part is the interest rate, the opportunity cost, so to speak, of not lending the money, and the rest are pure entrepreneurial profits. If my profits do not reach the amount of the implicit interest rate component, I am incurring pure entrepreneurial losses, like in the example at the beginning.